US stock markets rallied last week after the softer-than-expected inflation print report last Thursday reignited hopes that the Fed will slow down its aggressive monetary policy, tightening practices as inflationary pressures appear to have peaked and are slowing down. This week, the easing of producers' price index provided more support for the equities sector at the expense of the dollar. In this report, we aim to present the recent earnings releases, results of Walmart and Home Depot of the third quarter, and conclude with the technical analysis of Dow Jones Index. Walmart, the retail consumer staples giant famous for its hypermarkets across the United States and Mexico, was in the greens yesterday, closing the day near the $147 mark. Walmart is up marginally by roughly 2% on a year-to-year basis, while its 52-week trading range is between $117 and $160. Yesterday, the company released its third quarter earnings report, with the results beating both revenue and EPS expectations, causing its share price to rise by more than 6.5%. In regards to the figures released, Walmart exceeded revenue projections by $4.7 billion in the third quarter, and EPS reported beat forecasts by 18 cents. The results led analysts to upwardly revise their projections for the next quarter. Traditional stores contributed the most to the success, with comparable sales growth of 8.2% in the US for the third quarter, as well as a 16% growth in the e-commerce segment of the business. It is evident that consumer spending trends are shifting as inflationary pressures persist in the US economy, pushing high-income earners to opt for less pristine retail stores. The company's CEO, Mac Macmillan, commented that customers that came to us less frequently in the past are now shopping with us more often, including higher-income customers, highlighting the shift in consumer spending trends has indeed been affected by inflationary pressures as they continue to take toll on their purchasing power. Furthermore, the company expects the trend to continue going forward, forecasting that more consumers and members will be choosing Walmart, attracted by value and assortments the retail offers, despite the cost of everyday items being still stubbornly high across many of their item categories. Even though Walmart's executives appeared optimistic going forward, the company's CFO acknowledged the possible adverse effects inflation can bring. While we are encouraged by our position and our confidence in our business remains high, the macro backdrop remains challenging as persistent inflation is impacting the consumer and our business. Lastly, of material importance for Walmart's price action will be the retail sales rate for October, expected later today, and could provide further support for the stock should the actual rate meet the expectations. The Home Depot Incorporated, the consumer discretionary colossus, famous for its home improvement shops for retail consumers, was in the greens yesterday, closing the day near the $312 mark. Home Depot's stock price is down by roughly 23% on a year-to-year basis, while its 52-week trading range is between $264 and $420. The company announced its Q3 earnings report results yesterday, and analysts were surprised to see the retailer beating both EPS and revenue estimates. The results showcase resilience from Home Depot navigating through a challenging and tumultuous period of high interest rates, surging inflation and supply chain disruptions alongside intensified concerns about rising US mortgage rates. More specifically, the company beat EPS forecast by 12 cents and revenue reported an upward surprise of more than $900 million. Following the release, the upward revisions for the future performance of the company increased, with analysts appearing optimistic for Q4. The better-than-expected results were due to the strong comparable sales in both Pro and DIY customer segments, showcasing robustness amidst a period where home improvement and house remodeling indicators pointed to degrading demand conditions. On the flip side, elevated inventory levels were an area seen as problematic, since the inventory's turnover decreased in Q3, signaling stock replenishing inefficiencies, and the inventory growth primarily reflected the inflationary problem as well as strategic decisions in response to the supply chain disruptions. All things considered, the results were apprehended as positive by analysts and led to increased levels of upward revisions of Q4. Thank you for watching.